안녕하세요. 김원장의 인사이트입니다. 오늘은 파이퍼 샌들러가 테슬라 목표 주가를 315달러에서 500달러로 상향 조정한 소식을 전해드리겠습니다. 이 소식은 테슬라의 미래 전망과 AI 기술 잠재력을 재조명하며 투자자들에게 큰 주목을 받고 있습니다. 지금부터 자세히 알아보겠습니다. 파이퍼 샌들러의 보고서에 따르면 테슬라의 목표 주가 상향 조정은 주로 인공지능 AI와 완전 자율주행 FSD 기술의 잠재력을 반영한 결과입니다. 파이퍼 샌들러는 테슬라가 여전히 1순위 매수 및 보유 아이디어로 평가받고 있다고 밝혔습니다. 이번 상향 조정은 테슬라가 전 세계 자동차 산업과 기술 분야에서 차지하는 비중과 장기적인 성장 가능성을 반영한 것으로 보입니다. 파이퍼 샌들러의 분석가들은 테슬라가 2024년 약 179만 대의 차량을 판매할 것으로 예상하고 있으며 이는 2025년에 196만 대로 증가할 것으로 전망했습니다. 또한 사이버 트럭의 출시로 추가 7만 대의 판매 증가 효과가 있을 것으로 내다보고 있습니다. 장기적으로는 2032년까지 연간 약 460만 대의 판매량을 달성할 수 있을 것으로 기대하고 있습니다. 이번 보고서에서 파이퍼 샌들러는 테슬라의 AI와 관련된 주요 비즈니스 모델, 특히 완전 자율주행 라이선싱의 수익 기회를 강조했습니다. 현재 FSD는 테슬라의 핵심 성장 동력 중 하나로 평가받고 있으며 이는 테슬라의 기존 사업 가치의 새로운 성장 가능성을 추구하고 있습니다. 보고서에 따르면 테슬라의 현재 사업 가치는 주당 약 300달러로 평가되며 FSD와 AI 기술이 이 가치를 크게 끌어올릴 가능성이 있다고 분석했습니다. 파이퍼 샌들러는 단기적으로 테슬라가 불확실성에 직면할 수 있다고 경고했지만 장기적인 관점에서 매우 밝은 전망을 유지했습니다. 예를 들어 테슬라의 2025년 상반기 실적이 다소 불안정할 수 있지만 이는 회사의 장기적인 성장 스토리에 큰 영향을 미치지 않을 것이라는 의견을 밝혔습니다. 또한 파이퍼 샌들러는 테슬라의 AI와 로봇 기술, 특히 옵티머스와 같은 로봇 프로젝트와 신경망 훈련 서비스가 미래 성장에 중요한 역할을 할 것이라고 전망했습니다. 이러한 기술은 테슬라가 단순한 자동차 제조사를 넘어 기술 플랫폼 기업으로 변모하고 있는데 핵심적인 요소로 작용할 것입니다. 마지막으로 파이퍼 샌들러는 테슬라가 여전히 최고의 매수 및 보유 아이디어 중 하나로 평가받고 있다고 강조했습니다. 투자자들은 테슬라의 AI 및 자율주행 기술이 실제 세계에서 구현될 가능성은 점점 더 인정하고 있으며 이는 회사의 주가에 긍정적인 영향을 미칠 것으로 보입니다. 지금부터 파이퍼 샌들러의 테슬라 목표 주가 상향에 대해 수협 네트워크 방송에서 두 앵커의 관련 뉴스를 함께 보시도록 하겠습니다.
Talk some of the big tech stuff. With me in studio, Jenny Horn, host of Next Gen Investing, with some big names on the radar, Tesla and Apple. Jenny, let's talk Tesla here because it is kind of one of those that fits the overlap between Trump and stocks. And we saw Elon doing a couple of his Elon pumps at the inauguration. Did you see that in the corner?
The memes that are coming out of this inauguration are incredible, I mean, especially regarding Elon Musk. But of course, he's been the biggest beneficiary of this Trump bump. So now what does that mean for the stock, especially considering that in his inaugural speech, Trump did say that he plans to end this EV mandate and that he's going to right now revoke so many of these basically the Green Deal that will benefit some of these traditional auto companies, which he says this is sacred pledge to their great American auto workers. But the mandate he's referring to is the EPA rules that require that these automakers sell battery EVs to avoid these hefty now really emission-related fines. So that doesn't end the mandate entirely, but it is thought that per state, like right now the California Air Resources Board, or CARB, regulates California's emissions. That's a pretty substantial portion of Tesla's zero emission really gains. So that is what I think is of the concern, is sure, maybe federally we'll see less benefit. Also, the thought is it could end the $7,500 tax credit that benefits the EV world. I think this is way more of a concern, though, frankly, if you talk your Lucids, your Rivians, less Tesla, because it all depends on where you see the growth of this company, frankly, because there's ironically a note out today out of Piper Sandler that highlights actually more of its AI push. So if you're of the thinking this is an AI play and we'll continue to see a run up in the AI story, this is a benefit to Tesla. But if you see it as truly an EV, a car maker, you'd say that there could be some turbulence under this new administration.
Well, it's a little bit of twisted logic because it's going to, lack of an EV tax credit, it's also going to diminish Tesla's demand. The idea is just that they can handle it better than these other nascent companies who don't really have the financial wherewithal to operate maybe without that initial incentive for their customers. So it is a little bit of like shooting yourself in the foot to some extent, but that's the logic the market's going with. And even though I feel like it's easy to dispute some of that, the price has told us otherwise, and it seems like Wall Street believes that it's going to continue, right? This is a pretty big price target this analyst put on it.
Yeah, $500 a share from Piper from $315, or about 17% above where we're actually currently sort of trading. They think that there's the potential for this massive real-world AI opportunity, and as a result, they do entertain more of these upside scenarios, saying that this is their number one buy and hold idea. And they did concede the first half of this year will be choppy, which I think has historically been the case for a name like Tesla, especially, again, given the ties to a new administration, but did say that the long-term narrative they believe is taking a back seat when current year estimates are falling. And in this regard, they still do see the outlook remaining highly uncertain, but believe their financials really rely on these two metrics, vehicle deliveries and automotive gross margin. The outlook for the former is uncertain, they said, given, again, the timing of some of these new products. But I do think that when you look at estimates, we're expecting more and more, like they're expected to deliver just shy of 2 million units in 2025, up from 1.8 million in 2024. We're also expecting more than 100 million units of the other unknown vehicles and 70,000 of these Cybertruck units. So these are all, I think, hugely important, but also the fact that this is more than that now. This is also like an alternative battery company. This is also, I mean, like a push into some of the, I know the green energy trade is right now a bit of a mixed picture, but also AI, autonomy. I mean, FSD, robotaxi. There's a lot more.
Don't forget Mars.
Yeah, don't forget Mars. The only thing
I
think that is like of the concern is Elon Musk is spreading himself so thin. But I guess I also somewhat like trust the fact that with him being so much in President Donald Trump's ear that I can only imagine this being favorable.
That's what I'm saying, is that like even though Mars has maybe got nothing to do with Tesla, it's just I think the market's basically going, he's there in the back corner of every meeting. Let's not sell his stock. Let's talk Apple real quick. Hit me with this note because it's pretty negative actually from a couple, right?
It is. So the concern really from Jefferies is the iPhone demand has already materialized. They basically think the AI hype is not enough to drive like this massive demand for the iPhone 16, lowering their price target by 13% to $200.75. This is still, though, optimism for the potential for AI has been like a massive force of the AI story and the Apple story, frankly, of the last year. We pulled back about 10% now over the last month. Loop was another one today downgrading shares, highlighting supply chain checks pointing to lower demand. I will say, though, because this felt oddly similar to what we talked about last year, 2024, the first 2 weeks of the year, we got two very similar, honestly, the language was even similar, downgrades from Piper Sandler, Barclays, who highlighted all of this AI weakness, and then we went on to have a pretty fantastic year. January is historically the second worst month for Apple stock. So I look at this as like, we've been here before. We've seen this pessimism. I
thought this was coming. We talked about this coming into January.
iPhone 16 and the AI push has not really been received super positive. And that's I think what was mentioned over and over is that so far we're not seeing this really drive like material business because it doesn't change and improve the products that significantly. I think that this is probably a necessary call. But again, historically speaking, January is not a great month for Apple. So expect some of this volatility.
All right. It's been a pretty rough couple weeks there for Apple. So definitely a little bit of a blight on the market this morning with Apple down and negative commentary, but we got enough working elsewhere to keep us up. Thanks, Jenny, for looking at big tech there. Appreciate it very much. Tesla in the good graces of the market as it looks for Trump trades. Apple under some pressure, though.